20% or 30%. But you've got to cater for the worst case scenario. And therefore, that was, I think, the logic. I don't know what the logic was, but that, I think, may have been the logic.
Can I just add something to that? I totally agree with what Ali is saying. I think those are the issues that need to be thought through. But precisely because of these issues, the need for urgency, the need for speed is there. You know, in the media, even in government circles, regulators, investors even, you know, there is a lot of talk and perception that, you know, why should they be liquidity injected into the stock market? It's just going to save, you know, few members of the exchange. Precisely what Ali is saying, and which is why governments everywhere in the world, regulators everywhere in the world have moved with great speed, is that the capital markets are integrated into the whole economy. Their impact is far wider. And the issues there need to be addressed with urgency and speed, which is, you know, what hasn't happened. So the issue has increased from the stock market to the mutual fund industry to what we saw, you know, the issues being created in the banking sector, you know, rumors being started, runs being started in the banking sector, and it has a very real impact on your real economy. You know, we've had, I think the market cap has gone down by about $35 billion. You know, that's the net worth that has gone down within Pakistan. So that has an impact everywhere, whether it's the government's own resource mobilization through privatization, whether it's a large group like Nishat, whose investment decisions will get impacted, whether it's a small investor who used that net worth to buy a house or buy a car or, you know, go out for dinner. So the income impact and the wealth impact of that over the next 2 years will be immense on our economy. And it's not clear to me that that realization and the interlinkages is understood or being addressed properly, because, you know, things should have happened. You know, we've seen a small 20 billion rupee fund and how much controversy that's created, and the inability to even structure that, let alone any other long-term
Without doubt, all financial markets are interlinked, and closing down the capital market, closing down the equity market and putting so much pressure on the rest of the financial sector is something which the regulator should have looked out for. How do you see this playing out, Mr. Tawfiq, especially in an inflationary environment, given that the central bank cannot release the levers on the interest rates, and perhaps will probably look to increase interest rates even further going forward?
Yeah, but what is the specific question that more specifically on the statement? Because when you talk about financial markets, you have to keep in mind there's not a unified financial regulator. So are you talking specifically just from the interest rate play on inflation?
Well, there's obviously interest rate play on inflation, but at the same time, the fact that one part of your financial market is shut down, and that will put stress, and is putting stress on the rest of the financial sector.
Right. But I don't think that is a decision or a comment for the State Bank to respond to in any case. I'm speaking as a commercial banker now. But we talked earlier about the balance and the hard calls one has to make. And we've talked about the interest rates, and you know, the first panel very clearly said, and I would tend to agree with them, that the monetary policy posture is not likely to change very soon. You know, if anything, it'll be 6 to 12 months before we can see a change in that. All depending on inflation related numbers. But in that context, I think the State Bank has been asked to provide or facilitate liquidity. As I said earlier, the SECP is not in a position to do that. So, as Farrukh said, you know, it's everybody coming together and deciding on it. It's not a one decision of the State Bank on the interest rate, because the interest rate is targeted at a very specific purpose. It is to control inflation. But the knock-on effect on the other part of the market, the equities, is certainly into consideration, but that's not a primary objective of any central bank. What earlier Ali also said in terms of the response and the linkages and the fear of, you know, excessive repatriation of overseas investors. Price discovery is one thing which is very important, and I fully respect Ali's views, but one has to keep in mind that what is stopping them from taking their money out right now. It is going out even now. The overseas investors. They're not just waiting for the floor to be removed and the values to drop. Everybody knows they will drop. and then they'd stabilize. So it's, as we speak, it's going on. It's been funded. So it's a fine line. Even on reserves, I know we talk about inadequate reserves and they have dropped. But I know when they were growing, every forum talked about the cost of maintaining reserves and what is the optimal level of reserves a country should have. So, you know, there are always different sides that you have to look at and you have to balance out. It's just not one narrow view that you can take and say, okay, I'm going to deal with it. So I think it's all happening now. It will be, I see, a more cohesive approach. And I think it will inshallah stabilize. It will take some time, as it normally does. But if they stay the course, it will stabilize and it will help the financial markets.
What, Mr. Raza, this entire financial, well, the pressure on the financial sector, especially in this inflationary environment, what stress do you see this having on the banking sector going forward? Do you believe, especially with equities market in the state of, well, practical shutdown, and the mutual fund industry coming under significant pressure, do you think that there's a concern that new pockets of insolvency might emerge?
Well, I mean, certainly there will be an impact on the quality of loan portfolios. Not a major impact, but there will be some impact. There will be some increase in non-performing loans, maybe in certain sectors. I think the textile sector has been going through a difficult period for a number of reasons, but not only related to the increase in interest rates, but all kinds of other reasons. So there will be an impact, but I don't think it's going to be an impact which is going to have a major impact on the solvency of the financial sector. Not at all. I think Farrukh made a point which I don't think many people have understood. You know, he was talking about in the context of Pakistan, the fact that when, you know, with the stock market having tanked, with people having virtually no money in their pocket, lifestyles will have to be adjusted and there'll be hardship, etc. Again, I repeat what I said at the beginning, that our adjustment will be maybe 2% of the adjustment, that Britain will have to make, that America will have to make, and their people will have to make in their lifestyles. And the reason why we are much better off is because our household leverage is almost, zero. It's like 1.5% of GDP as opposed to 70, 80, 90% in the US and in Europe. And this is again one of our strengths. You see, in this very difficult situation, I think you have to look at the countries that are that have more cushion to absorb and the ability